All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of Guard Capital. It is Thursday, September 21st, 2023. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time here on our YouTube channel. If you're new here, make sure to hit that like button. If you like these videos, comment your questions. I'll do my best to answer them during the video and after the video is done, obviously. I'm glad to be with you guys. Okay, so let's get to it. There's a lot to talk about. A lot I want to say. My analysis in terms of what happened yesterday, what Powell was talking about, what we see moving forward, where Carlos was wrong. Those are my favorite segments of our videos because it happens, absolutely. But kind of like a press conference after a sporting event. You have a loss or you mess up or you're wrong. You have to kind of face the music. But that's kind of the deal. You're going to get it wrong sometimes. But what we do moving forward is we assess the data and then we make our conclusions moving forward. And you have to have a short memory in this business. It's just the reality. Can't dwell on things. But a couple of things that I was looking at yesterday really quick. If you guys remember this week on Monday and the recap week, I was saying it's kind of hard to justify why to buy stocks here, right? We don't know what Powell's going to say. We don't know what the expectation is. Well, the expectation was no hike. We didn't get a hike. We were flat. But higher for longer was the narrative. Powell did not say those words. I was live blogging the whole way through. Expectations for another rate hike is around 25% for November. There is no Fed in October, so keep that in mind. So what do we do here is the question. Man, if it was as easy as just shorting, we would have caught JPM last week. We would have caught Shopify last week for Masterclass. It is a grind in this market right now. We had no movement until really when Powell was speaking. Yes, we got the initial move on S&P right around 2 o'clock. We were right here at 44.98. And again, right between 44.98, we were either going to say, hey, we're going to go to 45.50, and then we're going to pull back to 4,500, which is the expectation. Either that or 4,500 rejects, we get to 44.50. And we broke that. We actually got to 44.50 right at the close. This is all pre-market. This is all after hours S&P. So it was pretty much one of the two. Red or black roulette wheel. This is why I did not short. I only had one long, which was Apple. Apple flipped on us. We were actually green in the morning, the actual option. Hindsight being 2020. Yes, we should have closed, but I stuck with my analysis, and yeah, that's what happens. It falls. So with that being said, we're going to have to get out of that thing. I still have Delta. Obviously, I can't close anything pre-market, but Delta calls the UOA. 38.68 was the 200-day. We are below it, so I'm not going to rush right away to close DAL. Apple, I'm just going to salvage as much as I can because that just got dumped with the S&P. Looking at the S&P, I know we're not going around the horn here, but this week, even yesterday, I wrote down in my journal, I wanted to short IWM, I wanted to short Microsoft and Netflix. These names were part of the watch list. That's the kind of the killer. It was part of the watch list, and the only reason we didn't send that out is not because we were long on Apple. That doesn't matter. You can have calls and puts. We had that with JPM, if you guys remember. The only reason we did it is because we weren't sure. And if I'm not sure, in futures, we didn't trade anything. Little Nick, bless his heart, Nick B, who does our videos, was pounding and yelling, pounding the table saying we got a short. And I just was not sure. That's where I was. Not because I'm an ultra bull. We've talked about the VIX being depressed, VIX seasonality spiking. We talked about seasonality on the S&P towards the tail end of September tends to get weak. This is the weakest time of the year. In my mind, I'm thinking it just can't be that simple where you just short everything and we're just going to tank, because the last FOMCs, we haven't had that. So obviously we did. Looking at the daily on the S&P, we are still above the 100-day moving average. We have not been below that since March. We need to get below 4,400. Here's the problem. I don't know if we're going to get there. Heaven forbid we soar today to 4,450 to 4,500. I'm going to grab my monitor and throw it out the window because it's just chop. Yes, finally we had some kind of move for an hour, basically, an hour and a half. That's what we got the move. Yes, we're getting some this morning, but we are even bouncing right now. So let's go over it rather quickly. Dow futures down 166 off the lows. NASDAQ down about 1.25 off the lows. S&P 4411. We need 4400. That is your 100-day. I have no problem shorting. Guys, you've been with me. We have shorted many times. We shorted IWM during the real early stages of COVID when it got really ugly in 2020. I remember this was in February. We traded IWM in one day 13 times. Just give us something. Give us something. When there's nothing to do and there's nothing where you're not sure. Remember, it's all about probabilities. It's all about high probability setups. Yes, it would have been easier just to put all of it on red, but we didn't. So that's fine. I'm going to make sure and see how this move digests. Get me to 4,400. Yes, I'm into short to 4,300, possibly even to 4,350. Finally, we can cook, but the only thing I worry about is that this can be a wick and then you close at 4,450 today. How pissed off would everyone be? Is that possible? Yeah, it's possible. Is it probable? Maybe, but it's a coin flip until we break. Look at the VIX on the daily. Not exactly shouting at me total fear. The only problem with the VIX, guys, understand, there's a lot of one-day expiries, a lot of zero DTEs that skew this back and forth. So yes, it is a good reading of fear, but another one you could say is gold. Gold is down 1.61%. And you would think, hey, if the world's ending, why would I want to, buy stocks? I can just dump into gold. And here's your problem. The dollar, 105.54. If you guys remember, we were talking about the dead cat bounce. Well, it's not a dead cat bounce. It's a very alive cat bounce from July. And I said the dollar would bounce, and I expect us to roll over. We're starting to get to the point now. We have a golden cross, 50 above the 200. Now we got to see how high or how deep does the rabbit hole go. If we go just to the wick highs of the dollar, which was March. Remember, March we were below the 100-day moving average on the S&P. It is lining up for us to at least retest, if not break. So the dollar needs to be in focus. The problem is, just like anything else, guys, you can get overbought rather quickly. And again, with not a lot of momentum, you can get chopped. So when it comes to the dollar, at least for now, your best bet is Forex because that mitigates that. You're not going to have any kind of, time decay in terms of an option. But look at the dollar. It is continuing higher above the 20-day. I mean, at least retest 105.87. If that breaks, this is where things can get rather ugly. It does line up with that seasonality with the S&P in October. So let me see if I can get that chart for you guys. Let's see. Let's stop. Here we go. All right, so here's your seasonality one more time. We're just going to go ahead and take a look at it. We're right, the 21st? We could say we're right here, if anything, right around this area. Kind of a pullback is to be expected into October. Get a nice bounce, maybe retest some levels seen at the September highs. What was our September highs, guys? Around 4,600, right? Maybe 4,570 or so. Let's go ahead and verify that. So again, we kind of want to see if that's going to be kind of the script here. What was the September highs? Your September highs are 45.56. So it wouldn't be out of the realm of reality that we get back to 45.50 in October. And again, the slam. And this is where I've talked about. Stocks are not cheap enough yet. Investment Club, I love y'all, but there's not much to do on terms of seasonality. I think you get lower prices as we go. And again, nothing where the world is ending, but a nice discount, absolutely. You're talking about 4% move in that time period. Was that considered a crash? No. You're still in the top end of the range on the S&P. That hasn't changed. The only thing that has changed is the timing. When does this happen? Look at this trend line since October lows. We are breaking that, but we have broken that before in March. So you're right at a point where, again, like I said, the bears have an argument, the bulls have an argument. The question is, what side? What side? And the thing is that you want to be sure before you go ahead and risk capital. And that's where we only had one trade this week. We have to make sure that we're going to get the action that we want continuously. We want momentum, not chop up and down. That's not going to work. That's just going to kill premiums in the option market. Let's go to NASDAQ rather quickly. I know we're kind of changing the format. I didn't go around the horn totally. I really wanted to go over these charts with you guys so you guys can see. We are now at a level not seen since around end of August. We're not at the August lows yet. That's 14,751. We're at 14,962. The only regret I have is I didn't short. I didn't short into Powell, and I should have. But again, that's hindsight. Again, when you have both sides, if you're not sure, just don't do anything. Cash is a position. Sit on your hands. Let's see what happens. And this is what happened. We are now above still the 100-day moving average. So until you break that, there's not much to do. The last time we were below the 100-day moving average on the NASDAQ was in January. So, I mean, you're talking about 9 months now that we haven't broken that major moving average, and I don't want us to short right here and then we bounce. That's where frustration station comes in. That's where you're throwing things around, and that's not what you want. So again, I'm all for some price action, up or down. We've done it both ways. It doesn't matter. Make money on a short market, make money in a bull market. The problem is just don't chop us. Just give me a straight direction there, some momentum so we can catch it. Yes, absolutely. What I don't want is bounces like this. That's not what I want. I want some ugliness, some, okay, you hold for a little bit and you continue. That's what we want. Will we get it? That remains to be seen, but we will see what happens. In terms of Powell and the Fed, my real commentary on the Fed is that nothing has really changed. I know I have to answer some of your questions, guys. Just be patient with me. I love y'all. But I want to say this about the Powell and the Fed real quick because it's important. So what happened yesterday, I was live blogging it, is that nothing really changed. If we wanted higher rates, we would have got higher rates. We would have hiked. We didn't. So is this now to the point that, hey, are we talking 2007, early 90s type of thing? Is the economy really that strong? Really the take that I have is that I keep hearing that the economy is bad. Some people say that, some on Fin Twitter, that the economy is in shambles, the world's going to end. Yes, we've been hearing that now forever. Yes, 2020 kind of did. The world kind of slowed, it didn't end. But with that being said, it's that the economy is so bad, but we have to raise rates because the economy is so good. Yeah, that's kind of where we are in that kind of quandary. So they didn't raise, and we've had this issue before where last year in December, they could have raised 75, but they raised 50. One point I want to make on the S&P and the Federal Reserve rate hikes. What I think caused this move is the fact that they pushed the possibility of rate cuts until later of the year. Now, why would you have rate cuts? You don't do rate cuts in a strong economy. It doesn't work that way. You don't have rate cuts when you have record unemployment. You don't do those things. It just doesn't. What I took from the Fed Chair Powell is that, in my opinion, I think he likes where things are sans inflation. That's the only thing. He probably is saying to himself, economy is actually pretty good. It's just we want inflation to come down. Fair enough. So with that being said, I think the clamoring for lower rates or a rate cut is not a good thing, because if you get a rate cut, that means something is wrong. If you call your friend and say, hey, what's going on? What are you doing? And they say, I'm at the hospital. The first assumption is that something's wrong. Hey, are you okay? But if you just say, oh, I'm out and about, doing some stuff, yeah, you're not worried. Rate cuts signify or signal to us something is wrong. And the only way that will happen is if the labor market cracks. We just had another low in terms of jobless claims today. So let's take a look at that number. And that's where the market fell a little more. So let's take a look at it. Initial jobless claims, 201,000 versus 225,000 expected. Lower on the continuing claims. Lowest figure since March 2023. Didn't we test the 100-day on that day? So we are lining up to test and break those moving averages. The question is, do we get it? That's really it. Do we get there? Do we get continuation? So in terms of Powell, it really comes to the point we're going to stay restrictive until the labor market cracks. He can't say that on camera, hey, I'm going to keep tightening until you lose your job and you're hurting. But that's in so many words. The problem with them, and this is the real issue that I have, is that they're not consistent in the messaging. Yes, they didn't say anything different. But the fact of the matter is that if they wanted to tighten, they should have tightened. If the labor market is this strong now, why not just do 25 again? You have house money if you're the Fed because the economy is still good, GDP is still good, unemployment is still good. You still have consumer spending he was talking about. So why not make sure to do so? So the reason I think they didn't do it is twofold. One, they're not really sure. Fair enough. As a trader, I'm not sure at this point of where the market's going to go today. But on the other side, I really do believe in terms of the Fed thinking of not raising rates is the fact that there might be a government shutdown and they may not get the data. So they're probably like, shoot, man, let's not do anything because if the government is shut down, meaning the Congress doesn't get the budget passed, there's not going to be the data that they need to make decisions. So was this more a political move in a sense where we're just going to make sure? Or was it a point that they really do see that this is kind of an economy that can handle the current interest rate environment? And if that's the case, and the market can handle that, then the bond market wouldn't be pricing the way they are. So let's go ahead and take a look at TNX rather quickly, and then I'm going to answer the questions. I'm so sorry, guys. Let's go and take a look at 10-year Treasury yields. If you guys remember, I talked about lower rates, lower dollar. So far, that has not happened. Mid-year we did, but not right now. We are now at levels not seen since, 2007. How much more can we go? 4.914%. You can start talking about 5% too. But the question remains, things can change. Things can change rather quickly. If we get a labor market that has issues, that's where the rates cuts go. Good morning. Eamon has a question about Netflix. I am so sorry. He has the question on it. And Netflix, again, we talked about shorting that because there was a gap to fill, and it filled it. It filled it this morning. So you could see it here right around 383.74. Let's go to the hourly, and we broke it and filled that. So that could be to the point where it's already done. You do have another one down here around 340.93 on the daily. 368.33 being the 38.2 fib, but all it did was fill its gap. And again, if the NASDAQ breaks the 100-day, then yes, Netflix will slide as well because it's part of the NASDAQ 100. Look at this channel here, broken down, popped higher, and came down. That's where we are, just chopping away. Let's see. Good morning, Carlos. Good morning, coming from West Africa. What's up? What's up? What price are you looking to pick up Nvidia? Nvidia 378.11. That's our level, but we have a huge gap to fill. I prefer us to fill that gap first. That'll bring up a lot of fear out there in the market, and that's where we could start taking a look at a very nice discount on a really great company like Nvidia. And then I don't know if you've been seeing, but the CEO kind of cashed out some shares as well. You know, those insider selling, you probably think to yourself, oh, what's going on with Nvidia? Same thing happened with Walmart, the Walmart family. They sold shares like crazy. Now, that could have been for the Denver Broncos, obviously, that Walmart hit all-time highs. So it's not indicative of where the stock is going to go generally. We don't know why they sell. We don't know if there's stock options that are exercised or they just needed to buy another yacht. Let's not depend ourselves on just that. But I like that gap fill around $319.99. That's about $100 cheaper than where we are now. Could we get there? Hey, if things go the wrong way in October and rates really ratchet up and the dollar ratchets it up, absolutely, we can. I'm sorry about the sound in and out if you guys can hear me. I can't hear anything. Okay, it's on your end. Good morning. Thoughts on Apple calls coming to green? Hey, listen, I'm not going to lie to you. That is very unlikely. You're getting out this morning. You almost have to. The only thing we're looking for, if we're lucky, is if we get some kind of relief bounce or relief turn. But if that's the case, listen, don't, cut your flowers and water your weeds. If it's what it is and we lose on it, that's fine. Because then, hey, we'll see what the next opportunity is. But it is only one, and there's a reason why we only did one trade, because we weren't really sure Apple was the best bet on there. Here's our entry on these Apple calls. We got above it. We were green yesterday, and we didn't even get a chance to get out if we wanted to. It was within a couple of minutes, and then it just continued to sink. And you will go ahead and ask Powell what happened, right? Here's the daily chart. And again, nothing has really broken, 173.90. If you break below 170, there's a gap to fill at 166. And yes, at least we can make up for the Apple calls one way or another if they give us a shot, some kind of opportunity. Let's see. Hi, Carlos. What are your thoughts on natural gas is going higher as oil as well? Yes, we do know that when it comes to OPEC and commodities, they are affected by the dollar. Look at copper down today, silver, gold, but gasoline and crude, those are up. Real issue is supply constraints. It's if you stop producing and demand doesn't change, demand is still solid here in the US for gasoline and oil, you're gonna get higher prices. It has nothing to do with anything else than just less supply. I believe natural gas is at that point as well. I remember when natural gas was absolutely tanking, but now it's starting to bounce back a little bit. Crude oil is a better chart than natural gas. I don't believe that OPEC has anything to do with natural gas, but again, we could talk about crude being different. Yes, that's a better chart. And I wanted to short crude yesterday. I wanted to even send that out, and I'm glad I did it. It's best to just wait things out. If we start breaking above crude oil, I will long this to 100. No problem. 93.53. The frustrating part is that the XLE, the energy companies that literally benefit from higher crude oil prices, were down. They're not even performing the same amount as XLE. Look at XLE. Crude oil soaring, XLE coming down. That's the name of the game. So that's where we are, guys. Again, I apologize for the sound, Benjamin. You may just have to do a reset there. Good morning, guys. So that's where we are. The only kind of regret that I have, hindsight, of course, being 2020, Netflix and Microsoft and IWM. Wanted to short them, and I didn't. Doesn't mean that we can't. We are now trading at 178.57. We got a gap to fill on the daily on IWM, sure. Just give us continuation and we can rock and roll. That's all I want. Just, hey, if you're gonna tank, fall, continue to fall. Don't look back now. Don't be bouncing back to 44.26 on S&P 500. Remember, that's our kind of our dotted line in the sand that we've been kind of just hovering around. Remember, we had that head and shoulders that was invalidated. 1, 2, 3, broke above it twice. Now you're just channeling here between 4,500 and around 4,400. A whole 100-point move. Same place we were August 25th. Let's see what we get. Sorry, went a little longer than expected, guys. I really wanted to go over a ton of stuff with you in terms of the Fed, the charts, what to expect, and what we're looking at moving forward. Let's make it a great day. Let's make it a better day than yesterday, at least that. Day's done. We move forward. Let's hit it. Let's kill it. Let's make sure we have the right setups, and we'll move forward. Appreciate you guys as always. Thank you so much for your support and watching. I will see you guys tomorrow. Cheers.